So we are back in the after party. And first thing I want to do is give a shout out to some of the people like Chris, who has been a long time listener, but a first time attender, he says, right? So I love that. And I'm glad you guys are engaging with us and stuff like that. One of the things I wanted to start with was a question from Glamor Property, who asked about Larry. She wants to know, for the buyers that came in, did you use an RMLO, a residential mortgage lending officer?
That's a great question. Yes, absolutely. Absolutely we did, because if we're going to make the loan Dodd-Frank compliant, we need to do that. So yeah. Yes, we did that. Great question.
Yeah, we always
not only that, I wanted to say that, I've been buying seller financing for 40 years, right? And what I've learned is that the real estate investors that used to just vet their buyers themselves, now they have a discipline of using the residential mortgage loan originator, and they'll call it a little bit different things in different states, but that's generally what the acronym means. Yeah. They vet the buyers better. A third party who's doing the underwriting process, it's underwriting the loan, Larry, to your specifications, making sure it's legal, but you still get the yes or no whether I'm okay with the guy. And all of a sudden, it's kind of a done-for-you business that makes your bank better.
Yeah, absolutely. And I think the other piece of that too is almost the outsourcing, right? You don't want to get in the business of collecting W-2s and pay stubs and bank statements and trying to make the decision yourself. Let someone else handle that, right? Allan asked, what do you pay an RMLO? And the reality is kind of twofold. It's typically a few $100s in my case. But the bigger thing is, in a lot of the cases, you're going to be asking your buyer to pay this as a part of this process. This is something they're more than happy to do, simply because you're providing a service, the financing, and you're offering something that really no one else is willing to. And so these little fees that add up to you, the buyers, a lot of the time, as long as they can afford it, are more than happy to do it.
Well, and Brian, the other part of that is, again, you said that correctly, in that you're going to have the buyer, that's part of the buyer's cost, but they don't have all of these other crazy fees that you do when you go to the big banks, right? You don't have all these loan origination fees and all these different things. So it's a smoother process. Yeah.
Yeah, smoother process. Closing costs are going to be less. You don't see this run up of points being paid to a lender that you can't figure out what you're paying the fee for, kind of thing. And again, to Glamor Properties comment, the vetted buyer pays the RMLO if approved for the purchase. That's right. Our goal is to have them go ahead and do that. Let's see.
I just might want to add too, is basically, my wife used to be a mortgage loan officer. So we kind of do some pre-qualification beforehand, because we don't want to promise anybody something and then there's not a chance in heck that they could actually qualify. So we do that as well too, because, you just don't want to take anybody down that little rabbit hole.
Yeah, absolutely. And this is, I think, how you kind of get the funnel, right? You start at 800 people. You're not going to call 800 people. And even out of the 50, you're not going to say, go talk to an RMLO if you don't have a down payment, if you can't afford $1,000 a month or whatever the payment is. You're kind of using some common sense rule to set expectations, manage expectations, and then say, these are really the 3 qualified people that would be worth learning a little bit more about.
Larry, one thing I wanted to talk about, because you're deep in note school, and we discuss this behind the scenes in our labs all the time, right? But most people that are here aren't necessarily in these labs, and they don't hear this conversation. The reason that we suggest you run the ad that you ran, and you had more wording in there than I might have put in the ad, but it worked, right? You can't argue with success, right? Is private financing says something different than seller financing. A lot of times to the consumer, seller financing or owner financing means no qualifying. While you did private financing, you alluded there was a lender and a process. But you also said something that was said, just because you've been turned down for a traditional mortgage doesn't mean you're bad. Private financing for deserving buyers. And you also did not specify the down payment, but you didn't allude you didn't allude you were going to get into it for nothing. And you said private financing for deserving buyers with large down. right? So there was that few words says a lot about the smart advertising that brings you the customer you're looking for.
Yeah, absolutely. And Michael in Atlanta made a comment saying, "Is this is it really difficult to apply these concepts to the commercial space, to commercial property?" And the reality is, no, it's not more difficult. It's really the exact same concept. In fact, I would say that traditionally the commercial projects, that when you look at small businesses and commercial, seller financing is a much bigger player in that space for a long time, just because of the price point. People don't qualify for, say, millions of dollars, right?
Well, remember this. Seller financing fills the gap conventional lending doesn't fill.
Correct.
Okay. While there is a shortage of real estate, there also right now is a shortage of financing on residential property. Essentially, 35% of the people that could get a mortgage last January can't get one this January. Now, people say, well, that can't be true because their property is escalating in value. Yeah, when you have a shortage of inventory, the best buyers can still get a loan. But you still have this big pool of people over there that are really what we believe are good buyers that have now been eliminated from conventional financing. And Larry, what Mariska was a loan originator. You're very sophisticated, in the space. What would happen if you would have sold this property and he would have trying to get a conventional mortgage for $32,000? What would he have found out?
Wouldn't have found anybody willing to do that. Yeah.
Nobody would make the loan.
Yeah.
Dodd-Frank requires that they limit the fees to the point that a mortgage originator doesn't make $32,000 loans anymore. So you filled a gap in the market that nobody else could fill, which was hoorah for you. You created a home buyer, not a renter. Now let's talk about commercial. Okay. While residential is on fire and doing crazy good, right, guys? Mm-hmm. What is not doing so good right now are segments of commercial real estate. So what do you think happens to lending, Brian, when we start seeing a contraction in the market?
Yeah, it goes down.
You see a contraction in lending. Yeah. So what happens is then seller financing fills the gap, not just on resi property, but on commercial properties of all kinds. So great question. And let me just tell you that we're going to be talking a lot about commercial as it relates to creative financing structures along the way, because the market's just going to demand it.
Right.
Yeah, absolutely. Well, as we're kind of wrapping things up here, I wanted to mention Peggy's comment. She's basically asking about the boots on the ground. How are you able to do this from this farther distance, right? And so talk to us a little bit about your boots on the ground, so to speak, which is really going to be, I'm guessing, your note servicer who's going to help facilitate a lot of this.
Actually, after we decided that this was not going to be going into getting payments back in, we actually took over the servicing and because basically they weren't making payments. So it's really actually pretty easy to find boots on the ground. It's like you can either go on to well, in this particular instance, I believe we actually just found somebody through the borrower that said, hey, I can get somebody to put the lockbox on there, and we had a couple contractors that would actually, excuse me, because we do other properties as well too. We actually had a lockbox on there already because we had the property preservation company would go out and do that. So then it was just basically kind of a trust sort of thing. Also, it's kind of cool because we found out that a police officer lived next door, so the house didn't have any problems with vandalism or anything like that. So
Brian, let me just make a comment there in general for the audience. One of the things that we have found that is an educational gap is that people don't understand that there are all kinds of services and vendors, unlike there were 25 years ago. Right. There's all kinds of service and vendors that can be our boots on the ground that don't have to physically be our boots. And so we bought assets in 35 states over the last many years, and we've never physically been to those properties. And people that are used to buying just in their backyard and think they always have to have the key in their physical hands to own a property or to own a rental or whatever, or sell a property. We just, I think we teach people different ways to do it. And so it doesn't shock us at all that Larry did sold this property way across the country. Larry really just implemented an executable plan. And of course, he implemented it to perfection, but he just implemented it. There was nothing that came up in this process that I think was a shock to you, right, Larry? It was just a normal thing that you sort of knew was available.
Well, thank you for that, Eddie. Yeah, and you know, it's some of it's through trial and error when we've been through this before and what works and what doesn't and so on. And so, yeah, I guess I again I thank you for your compliment for that we implemented to perfection.
Well, I love that. Well, that kind of wraps up our after party. Larry, thank you so much for joining us and sharing today. Eddie and Joe, as always, it's great to see you.
You too,
For all
man.
of those who joined us, I really appreciate you jumping on, asking your questions, engaging with us. It means a lot. Hopefully you got a lot of value out of it. We'll plan on seeing you next week on NoteSchool TV. We'll see you on the other side.